Hello traders, Gary Wagner here, about 2:45 in Honolulu, 8:45 in New York on Wednesday, October the 6th, 2021, and this is the daily report for gold and silver. We are within 48 hours of the release of the U.S. Labor Department's jobs report, and that will be a key report in which the Federal Reserve will use to time the onset or beginning of tapering. It should have a dramatic impact on multiple financial markets, including stocks and gold. It will be an interesting day filled with volatility. Gold had a fractional gain today, up $2.90, basis the December futures contract is currently fixed at $1,763.80. What is interesting is that the low was $17.45. That is a lower low than the previous 3 days, and the high today was $17.65.90. Considering that it closed at $63.80, we can see that the recovery resulted in gold closing very near the highs of the day. We are looking at a daily chart of gold futures, which encompasses today's action along with the beginning or opening in Australia. What is most important on a technical basis is recent resistance, because it is quite clear that it is the 21-day moving average that is providing the first level of resistance. As I said yesterday, we can see that on Monday, the intraday high of that trading session came very close to, but below this particular price point. The 21-day simple moving average is currently at $1,766.78. And then there was yesterday, because on yesterday's trading activity, the market actually opened right at that price point and traded lower. In fact, if you look at any kind of a wick, in other words, the differential between the open and intraday high, it is very difficult to see. It is simply a tick or two. Today, although the market closed higher when compared to its open and higher when compared to yesterday's close, it was a fractional gain at best. It did make a lower low, but I can expect increased volatility as we get closer to the release of the Labor Department's jobs report on Friday. While it is clear that the numbers released on Friday from the U.S. Labor Department will shape and determine the future direction of gold, we can use a Henkinashi or Japanese average chart to look for clues of shifts or changes in market sentiment, because it defines strength or weakness of a trend. We can see that we did have a pivot come into the market in which we hit this bottom. We had a series of red candles to this pivotal candle here. The first day of that rally had no lower wick, decent body size, but that was immediately followed by a small lower wick. The upper wicks are not that important on the upside. And then when we look at the action that occurred yesterday, we had strong lower and upper wicks, and then a pivotal candle today. And this is the candle that is forming from overseas trading, so we won't use that in making our determination. What it does show is that the bullish sentiment that was short-term but definitely apparent in the market as we saw it move off the lows has been waning. We have the opportunity to see a pivot. However, it shows us an indecisiveness in the market, which makes absolute sense because traders are really cautious about initiating positions and trying to guess what those numbers will be. Although we have a sense of how it will affect the Federal Reserve and their decisions, to try to make an assessment as to whether or not the economic forecasts coming in are very close to the actual numbers or a mile apart, so to speak. One extremely interesting facet to today's fractional gain is it did that with tremendous headwinds from dollar strength. The dollar itself was up 0.3%, currently fixed at 94.24.5, and we had gold close up by 0.16%. So it was able to generate a positive close even with the strong headwinds from the US dollar. This daily dollar chart clearly illustrates the massive moves that we have seen in the dollar index. Of course, at the end of 2020 is when the dollar index hit its low. It had a sell-off from about October down to the beginning of 2021, hitting just above 89 in terms of value. Then it went into rally mode. The first rally that we saw took it to 93.43. That's this top. It's why we've highlighted it. Market then corrected. And what is interesting about that is the low that came in was above the prior low. That is a bullish statement that you would expect to see in an extended bullish trend. When the market rallied, you can see that it hit a slightly higher high, 93.73, before retracing slightly, and we are now above both of those price points as we saw an intraday high of 94.50 with the dollar index currently at 94.245. However, the brass ring, so to speak, occurred last year when we saw the dollar index back in October 2020 move to these highs of 94.80. And we're not that far off, and that would be the next level of technical resistance should the dollar continue to gain value. Both gold and silver had identical fractional gains of 0.16%, and both precious metals had extremely moderate headwinds with US dollar strength. This was the chart we used on yesterday's show to talk about the range that silver has traded through in 2021. We made the obvious observation that we are trading at or near the lowest price this year, and the differential between the high and the low trading range is about $8. That being said, we still believe that the next level of resistance comes in at around $23.50. And in terms of our forecast, if we see gold and silver rally, undoubtedly silver will outperform gold in terms of percentage gains simply because it is much more oversold. This is me, Gary Wagner, wishing you as always good trading. We will speak to you tomorrow for the next daily update and review. Bye-bye.